What does the market sell-off mean for August? That's coming up on 3 Minutes on Markets and Money. Markets set to open lower this morning after a strong July. As we discussed previously, negative sentiment, negative positioning by managers, all really kind of set the markets up for this very strong rally that we've seen. This is very similar to the rally we saw back in March, where we had the same type of bottoming pattern here. Of course, this was where Russia invaded Ukraine. Markets then bounced off that, retested the lows. Of course, we see this exact same pattern occurring now. We had this nice bottoming pattern that occurred over the course of several weeks. Market has now rallied nicely, triggering a MACD buy signal. Again, same type of structure. Market's now back to very overbought conditions. The MACD signal itself back to levels that we saw previously back here in March. Of course, the market then started trading lower as we triggered a MACD sell signal. That led up to the retest and resetting of new lows. Now, I'm not saying currently that we're going to set all new lows in the market. Of course, there's certainly some risk here. Fed is tightening policy, earnings aren't that great, and you can only have so much of a rally based on, well, earnings weren't as bad as expected. So things are going to have to start improving, or we are going to potentially retest these lows at some point. But right now, the most critical thing is that markets hold this 50-day moving average support, a retest of that support that leads to the markets working off this overbought condition that we have without violating that support level will set the markets up to continue this bullish rally. Now, the month of August tends to be a weaker month historically. September's not that great. So we've got about 2 weak months ahead of us before we get into the seasonally strong end of the year. That's October, November, December. The problem is that by the time we get into the end of this year, the first of the rate hikes by the Fed back in March will then be impacting the economy. So again, while we're expecting a stronger end of the year rally, which is seasonally what you'd expect, there's still risk here of slower economic growth, still high inflation, and a still very aggressive Fed impacting earnings growth, which would potentially translate into lower equity prices. That's something to be paying attention to as we navigate this. But right now, look for a pullback to support here over the next few days. Markets are overbought. Take some profits, reduce some risk, raise a little bit of cash. Well, then we'll see what happens next. I'm your host, Lance Roberts, for 3 Minutes on Markets and Money. See you back here tomorrow. Then actually set up for a nice...
For a rice rally.
Exactly. Then set up...
With broccoli.
Stop it. Then set up for a very nice rally, triggering a MACD buy signal. Again, we see this exact same pattern. We may not have 3 minutes on Markets and Money today.